the pain continues for a lot of banks, and including big boy HDFC Bank looked reasonable at 1600. Then the results came, extended fall, and now it's down for the fifth day on a trot. My colleague Vishwanath Nair, who's joining in right now with his analysis of what is the reason for the pain, beyond, of course, the obvious ones, which is the results and the wobbliness post that as well. Vishy, not looking good for HDFC Bank at all.
Yeah, so HDFC Bank announced its results last Tuesday, and since then you've seen this consistent sort of reaction within the market. The numbers per se were not so bad, but there were certain areas, certain ratios which did not make a lot of sense to the market. Like, for example, the net interest margin did not make sense, it being flat and there being no close commentary on how it is going to move going ahead. Similarly, on the earnings per share, you saw a year-on-year cut for the first time in a decade. Now, obviously, a lot of that has played out over the last few days, but what we understand is that the negative sort of sentiment on the stock is largely coming from the domestic investors, the domestic clients. So what CLSA has said in a report essentially is that for the foreign investors, the expectation is that the worst seems to be over. You're seeing things improving at HDFC Bank, and of course, in the near term, you will in the medium term at least, you will see the benefits of the merger playing out. However, the domestic investors believe that there's an issue here because what the bank is guiding for, about a 15 to 17% loan growth, that along with a improving margin scenario is completely an impossible sort of situation, primarily because to fund that 15 to 17% loan growth, you need deposits about roughly 5 lakh crore. And if you want to raise that amount of deposits, you need to raise deposit rates. And if you raise deposit rates, obviously the margins are not going to look that good. What the domestic investors, what CLSA notes amongst domestic investors is that the ratio of bulls to bears has been higher in terms of the bears outweighing the bulls on the domestic investor front, while on the foreign investor side, you're seeing slightly more bullish commentary coming in. Now, that's what CLSA seems to suggest. We still need to see what exactly the market does with HDFC Bank. However, numbers at this point in time definitely showing a concern for future growth.
Yeah, thanks a lot for that.